Okay, when I'm ready, quick look through Friday's end of week closing screens. Just juggle some screens here. Cheers, James. I'm even going to take my hat off tonight. It seems to have warmed up a bit this afternoon. Fantastic day out there. So, let's just buzz through these markets actually. In fact, one second. I think my mouse battery's going now. Right, transports. Quite a deep pullback, isn't it? Let's have a look at what that is like in percent. Correction. Shall we mark these up today? Would be a good idea, wouldn't it? Percentage change. What's that? 12% correction in the transports. Let's have a look. Where we're at on the industrials. I could have set this up prior, couldn't I? But for those who are finding their feet in the market, it's probably let me just get rid of that bear flag there. It's probably something worth doing live. Keep it simple. I wouldn't like to be doing this on SharePad because it seems like a bit of a nightmare. Let me just get rid of those channels I drew there and we'll just go. So we've got a pullback. Hang on, I've got another one to go there. Should I do the Russell? Go on, I'll do them all. Obviously, you know, been focused mainly on UK stocks, but the way the US moves affects everything. So that's why we do this, you know. What the leader, clearly the leader is well, this will tell you, but at a glance it's usually the S&P or the Nasdaq, and I think it's the Nasdaq at the moment. So transport, traditional leader of US markets. It's kind of like I know they kind of say, well, the transports isn't what it used to be, but it still is really. The transports is doing well. You expect it to feed through to the other markets because of what it is. You know, more things are being transported. But traditional, if you're a Dow theorist, and you know, it's the way I look at the markets. That's a correction. A normal pullback, you know, so let's just say 5%. Correction, 10%. And then once you start getting over 20%, 15 to 20%, you know, the weaker markets going into bear legs. It's about watching the strongest markets. 7% on the industrials there. 4.8 on the S&P. 6. Oh, you know, the S&P is strongest at the moment. I take that back. You know, it changes on a day-to-day business, and the Russell down 12%. So we've got correction in one, close on. We've got correction in two markets, normal pullbacks in two markets, and the industrials isn't far off being in correction. You know, if it came down to the 200-day, that would be pretty normal. The way it tends to happen, large cap's not having a great day today. It's been a good week for us in small cap growth, though. Pretty sure everyone had an okay week in the growth stocks. So yeah, it is what it is. That's what's happening. If we go through the UK, sideways on the FTSE 100, 250 has come down to the voodoo average, and the small caps are actually outperforming the 250, which kind of, you know, kind of strange. But and AIM just heading down off that mean trend again, still in a bear market. We are the salmon going against the flow in the stocks we own. That's why we've got to be pretty good at picking the best, put the work in. All the best will float to the top of the GTRS. It just is what it is. Technically, I'd never go off the growth alone. I'd always go off the technicals as well, because a stock can have fantastic growth, but it could be dragged down for other things. Let's go and try and find one what looks like it's got good ADM. You know, technically it's beaten up. Do you know what I mean? Admiral. So, it doesn't look that bad. What you find as well is, technically, a stock can just be going sideways forever and a day, and it will fall down the GTRS. That's due to supply and demand reasons. The way the bigger the base, it just shows less interest. A smaller base is a more powerful base. So if they just keep drifting sideways for 8 months, 10 months, when are they going to break out? If they do break out, it's probably just a little bit of froth of the market rather than the stock itself. In many, that's my sort of view on that sort of thing. I know it's contrary to what everyone says, but that's the way I see it. So let's just look at a couple of other markets. We'll do an end of weeks sort of. Bitcoin would be very. I don't know where it is today. I think it's bouncing a bit today, but would be very normal for it to just do a normal pullback at some point. It might just go sideways in a nice tight base. iShares, TLT, right down on the lows still. It had a good run, didn't it? And then it's just run out of steam again. It's still holding the lows at the moment, but it's 52-week lows. Nothing bullish about it. Dollar having a pop here, and pound heading down to sort of levels not seen for a while. Moving on from that, let's just quickly look at oil. Oil popping today. Oil's not great for the market, is it? Oil spiking up like that on the old seesaw. Oil up, stocks down is the basics correlation. Gold hanging in there. It's going sideways. Which one's the one what's open today? Hang on a minute, I need to delete one of these. There. I'm sure I've written the wrong dates on things today. What date is it? 10th. Did I write the right dates on those stock charts? I'm not sure. So I'll just jump into the screens today. We'll see what's moving. Large caps having a horrible week. Small cap growth having a pretty good week. Just laughing at Mike's new shower curtain in the chat there. That's the reason I'm not allowed to go shopping very often, because I will buy something like that quite easily. Next up, yeah, nice move from an AMP today. Helping the cause. Stan continues, refuses to correct, doesn't it, that one? Through the investment trusts. Just fly through these. Yeah, up to highs now on that one. It's, official trail point on that one. Approaching a swing target. Yeah, I wish I'd not even put a line on that, because no trigger, no trade, obviously. I'll just say, obviously to newer members, I post stuff like this on the Twitter to get a little bit of traffic for the site. Get about 20 people visiting the site rather than the usual 10. But I'll just show you where we bought it. This little area here, we had a swing day here. It came back in. We had another swing day here, and anywhere in this little zone here was fair game as a cheat area. And then I'm trying to find that square tool again. I've moved things on my share scope. And then somewhere up here was basically the ad area. And I try and get the add-on within 5% of the base. So you can see this little 5% limit, probably something like that. That's my deal on doing stuff like that. Sometimes, 5% is unachievable on very thin, lower price stocks. And you never look back on a good trending stock and say, I wish I'd got a better price there. You only look back on the ones I didn't get my add on, and I'll say, come on, any price on that add point there, I should have had my extra. I should. There's nothing worse than not getting my add on, and the stock turns out to be a great one, is what I'm trying to say. So, it does happen though. It does happen, but it doesn't define us. So yeah, the usual. However you want, you could just do the base depth for the cheat, and you could still put your stop there. Sometimes they go reverse vol. That's the only thing. And then on the ad, you could either do that, or you could go to slightly, under this low here, the aggressive side of the base. Sorry, was it one of the Ian B was asking about that today? Yeah, I mean, there's you know, however you run your risk is where your stop should be. Initial position, if you cheated it, the most aggressive would be here. Less aggressive would be the base depth, and when you add to it, you you know, basically, I'd never. This is something I'd never do on a small cap for a trend, because when it trades the add point, I can't trail anything out of it to add to it. Do you know what I mean? But at the very, very most aggressive, say you did something like that, and then on the add point you did something like that, it's still aggressive. You, you know, I'm showing the most aggressive, you know, and I try and teach the least aggressive way of doing this, because it's, at the end of the day, there is a sixth sense involved. Something has the look, and it has, you know, the market is just in an okay mood. People are interested in stocks, and it has the gas in the tank I like. Or sometimes they don't even have the gas in the tank. You know, rolling the dice on being more aggressive pays dividends. And when it doesn't work, it doesn't matter, does it? It doesn't matter. You know, you can always, you know, it stops you out. You can always have another bite at it. The key here is if you get stopped out, if you're wrong for how you loaded the trade, because that's what we're doing here. We're applying money management to price action. At the end of the day, that's what we're doing. You know, if we're not doing that, I mean, there's different ways of managing risk, but that's how I do it. You know, I apply money management to price action, and when it doesn't work, it sometimes it won't work because of me, because I've just been too aggressive on it. The offset of that is when it does work when you're aggressive. I'll just show JLP. When it does work when you're aggressive, it can, because I did the same with this one. Take the log scale off so you can see the multiples of risk available there. It was a huge trade for us, and I added here, didn't I? So I basically did something like this. It was quite aggressive what I did, and then I trailed to here, and I added here. And I built that position. You can throw that in a spreadsheet and just, you know, trail and add. Built it back up to a full position, and when it works, it pays for all those paper cuts. But you know, coming full circle, they might have the look, they might have the growth, they might have the story, they might have everything, you know, something new, all the sort of things, something's going on, there's a reason, and it still might not work, is what I'm trying to say. You really can't, at the end of the day, even though you get a good feeling and you're right on these things sometimes, you're going to be wrong on them as well, is what I'm trying to say. There is no, you know, there's no what's the word? Well, you know, if you're right half the time, happy days. That's probably the best way of putting it. So that's the way I kind of think about stuff like that. I'll just quickly look at the. It's like when if someone asks me about it and say, "What do you think? What do you think?" You know, I'll say, "Well, you know, it's kind of a personal decision. It looks good. It ticks lots of boxes. It can still for other reasons, it can still just not work. So, you know, it's more about accepting the risk and not trying to find some kind of magic you know, reason. There's nothing you will ever find what will tell the future. It just isn't, is there? So that's why everything is built on risk management. This one here has got absolutely awful, uninteresting price action. I can see that it's ticking a few boxes there. I think it's had news today, has it? yeah, I mean, it's so choppy and uninteresting, but you can't argue that it's gone up. But in a very low beta way, that's 36%. It's kind of nothing, is it? Isn't it? Isn't it? Moving on from that one. I'll tell you what we'll do now. Actually, we'll just fly through the leaderboard and just the leaderboard. The filtered stocks I drop in the stock tickers page. I'll just bring this over again as well for, you know, I'm not sure if everyone gets to be involved with all these channels when I send them the link. The Excel methodology, you only get access to that if you've got my personal sheets, because basically it's just for that, those who've got the access to that. It's a dormant channel, but when someone finds an error or asks a question, I answer it in there for those who've got that. But the stock tickers, it's just filtered. This is a bit back to basics, isn't it, for everyone here? But it just filters the GTRS, and it puts basically a minimum of, I think it's primary trends 75% or something. So, and I think I've got 25% set on the gas in the tank. So basically the gas side, because you'll get somewhat might have 23%, say, but they've got 100% technicals. So I've just filtered out. I'm just going to go and have a look at the controls and see if I can see what I've got on the filtered. Oh, at the moment I've got 70% primary trend and 17% gas. So that just means that stocks what I've got 100% technicals and 10, 17 or less, something like this. These won't make. You see, Gore isn't making the list. So we're just trying to filter more for the cancelling style stock, is what I'm trying to say there. There you go. It's as if we knew the future on this one, isn't it? So what I will do now is, it's something I should do on a Monday, every Monday really, but because there's only 109. We've lost about 11 stocks this week out of the filtered list, and I'm just going to fly through these. And should I go? I'll just go through in sector. Most people are on catch up tonight anyway. So I'll just fly through on the sector. Obviously, aerospace has been doing okay. At TRT there, obviously a focus stock. Anything can hit the tape on these things, good or bad. But just, I've had quite a few messages since basically New Year about, and it seems that everyone has been correlated in this group for the returns, especially the old guard. And it actually, I mean, I know some of you de-risk a bit into strength and on the outliers, and even though you trade at a smaller account, some people trade 0.8% risk, which is nearly half of what I trade, and you basically, you've smashed it out of the park basically, because it's been a year where selling into strength has been a good, it's helped the performance is what I'm trying to say. I hold on for dear life, in a year where these stocks go on trending runs. I tend to do really well. But when you take out when you even out, you know, I risk more. I risk 1.5% in the trend portfolio. When you take that out of the equation, a lot of people have done better than me, and it's good to see in a pretty it was okay year in growth stocks, wasn't it? But it certainly wasn't a kind of market where everything just starts working. I haven't got the log scale on here. Just going to fly through these. SRC just chopping around in that retrace area. I'm seeing quite a few coming a bit deeper to the sort of 10-month correction bull. Homer chopping around. Times up at highs still. Cranswick losing altitude. Still, trend still up. Correction bull. MPAC. This has got the look of it wants to base out here for me. Time will tell. We're obviously talked about that one. Just technical, really. The swing area. Griffin having a couple of bad days there. MTL in highs. There's a RNS investor sort of meet on the 17th. It's good to know when these dates are. I just put them on the chart. Investor vlog or whatever they call them. It's just good to know because sometimes you'll see a bit of activity on a day and then you'll realise. I don't listen to them. I'll be honest. I don't listen to any of these. I feel it clouds my judgment. I don't listen to any of these directors talk things or any of them. I just basically trade the numbers. I know where I'm wrong. Pay point coming in deeper. AT SNX nice. FRP. Let's just have a look at this one again. FRP. Oh, it's financial, isn't it? It's not investment services. Through the rest of these, another 20 odd, 40, 30 odd, 40. Quilter, I'm gonna getting smacked by a downgrade, I think, today, that one. TCAP. A Just Group, or was it Just Group what got smacked by a downgrade? Can't remember. Maybe both of them. It's a good big cushion on that one though. Beasley coming back into mean trend. EMP obviously getting a bit of sugar today. HOC, the silver miners obviously, PAF, SRB, Marks and Spencers. It's the heaviest one for me this week. Big cushion on MKS as well. Family portfolio not having the best week. Beaks. Think of this as a big base, and this is a bit of a zone of interest, I think. It's the way I'm looking at it. Can I draw that line a little bit differently? Maybe not. He says, tries to. Yeah, I'm sort of viewing that as a base and potential zone of interest. It's just gone correction bull here, but it'd be nice if it could tighten up here. A Trustpilot coming in, you know, kept banging the table, didn't I? They all retrace. They all retrace. So this one's, I'm going to put this on the watch list actually. TRST. It's not exactly punching, is it? But you know, it might just do a pullback here, and you could see a swing point maybe somewhere around here over the next week or so. CNC, Filtronic off on its journey again. Playtech. This was a fantastic stock in 2011. Well, that's not 2011, is it? Oh, 2012. Fantastic stock. Look at this. Bang, bang. On its journey. I'm just going to punch this one in as well. And then I'll wrap this up as soon as the spreadsheet comes back to life. I'll come back to it. Train line. So obviously went on a bit of a rip. It's just come back into a little area here. TRM. What was the other one? P-Tech. P-Tech. Yeah, that's what's in there today. So I've got a little US list somewhere. I need to go through these lists and give them a right good clear out. I'll just have a quick look what's on here today. I've thrown this on the list because we've got like a potential big loose base there. Might tighten up at some point in the next year. This one went this week, so obviously if you're watching the US screens, you'll have seen this one set up on the 7th. Moving on, Datadog. Obviously we dropped this one because a couple of you asked me about this one. Coming in, you know, potential interesting area on this one as well. Meta, Reddit. You know, it's just gone off on a melting run, this one now. Looks less interesting to me, but I'd rather see a base on it. Arm's just basically taking a break, isn't it? It's just having a rest after all that action, and it's, you know, for those who are holding this long term, it's fine, isn't it? It's just got a bit volatile there, didn't it? That was the last. This was the first pullback after this, you know, gap up here. And it went on a swing move, then it came all the way back in. This one's obviously gapped above the, you know, the IPO high, and that's why it made it into the screener there. Nvidia, I'd put a line there for those who are holding this one. Some of you are holding it from all the way back here, which is pretty epic. Even from the last base, it went well, didn't it? 200% from that last base. Fantastic. So yeah, big cushion. So anybody got anything they want to look at quickly before I wrap this up? Cheers everyone for sharing the content over the last week or so. Again, you've been sharing it again this week. Really appreciate it. I don't promote what I do here very often, so it every little bit of traffic helps. This weekend, I'm going to try and get out of the house, but I'm going to drop the US screens at some point tomorrow. I'm going to I've got a list of GTRS jobs I want to do as well this week. I want to just hone in on those. Just a few more things. I'm going to just try something with the actual how I score the gas as well, because I do a couple of things what drag a few stocks in what I'm interested in, but I might just try and put an override in there to lose a couple of the settings I score, and but they'll still be highlighted on the stock in focus dash. Earnings breakouts being one of those things. So a couple of ideas I just want to try out there. But yeah, looks like we've got some nice weather until next week, so I'd make the most of it. Cold but nice. Cheers all.